We're going to do a brief video on AAPL, Apple stock analysis. We've got a daily chart up here for you with a 5-day moving average in green, a 20-day moving average in red, and a 200-day moving average in blue. And we can go back here to about January 2022. See, Apple put in a high of about $182, came down, bounced off the 200-day moving average here around the 14th of March and rallied straight back up, but failed to put in a new high, and then firmly went into, with this violation of the 200, firmly went into a bear market, and so put in its low here about the 16th of June in the middle of the summer, and then put in a tremendously strong rally, supported the 20-day moving average, or respected the 20-day moving average on the way down, and really respected it on the way up. It was just a classic example of getting long and staying long using a 20-day. But what this stock is doing right now is trying to make a decision as to whether or not it's going to stay in bull market territory and maybe make new highs, or enter into a trading range similar to this back here from late December 21 all the way through the spring and into May of 2022. So the reality of it is, it's not exactly oscillating around the 200-day moving average, but it's definitely oscillating around the 200-day moving average. It's a little off. It should probably be more about 155, and it's more like 158 to 160-ish, but it's oscillating around the 200-day moving average. And so that tells you there's enormous uncertainty as to what's going on in the minds of the bulls and the bears on this stock. At the end of the day, this stock broke the 200-day moving average and failed to stay above it. We turned around in a classic decline. The 5-day moving average, you can see, is almost straight. I mean, you virtually could have just traded using a 5-day moving average, which is almost impossible, but clearly got a break on the 20-day moving average. Now, what's interesting is the 20-day moving average is still above the 200-day moving average and the 5 days below it. So clearly there's a huge war going on here as to what's going to happen in the next few months with this stock. This price that we're looking at is yesterday's price. Today's price has not been updated on this chart yet, and as I speak, Apple's down $4 on about 13 million shares. Apple's normal volume is about 73 million shares. It's about 945 right now. So it's trading at $159, which is right around this level right here. So as you can see, it's beginning to fill its gap. There's a small gap here between 157-ish and 159-ish, and it's down. So this stock is down below the 200-day moving average on an intraday basis right now. So what I suspect is going to happen on this stock in the near term is you're going to get an expansion of this range, definitely. I don't expect it to stay in this narrow range of 164 to 152. This is going to expand. You're going to probably see more volatility like we saw back in this range. This was 150 to 176, so 25 bucks. I would expect this stock to trade in a range of probably $20. So right now it's hard to say whether it's going to continue to go down or go back up, but in the intermediate term, say the next month and a half, I would see the stock trading in a range of about 145, and then probably up here to 170, whatever that is that 25 bucks, something like that. Trade in that kind of range. Now, could it trade much lower than that? Sure. If we get this 20-day below the 200, we get the price below the 200, the 20, and the 5, then sure, this stock could easily go to 140s, 143-ish, 142-ish easily by the end of September. It's not, that's no problem. But it could also do the same thing and go up to 174. So it's too soon to tell, because we are literally oscillating around a 200-day moving average right now. They're fighting it out, but they're going to make a determination as to what they're going to do here in the next couple of weeks, at least in terms of a sideways movement. I think it's going to expand, as I said. Whether or not this stock's going to resume a rally like this or a decline like this, that's a whole nother question, and it's too early to say. We have to basically decide what's going on with this stock, and is it going to be a bull or a bear stock. And I know that sounds crazy, but moving averages can only can only tell you so much, and right now it's indeterminate, in my opinion, as to what's going to go on. Everything I've said is for entertainment purposes only, and my opinion, but I do think a range of the low 140s and the low 170s, up and down between there, is totally reasonable in the next month. Let's go down and take a look. That's the technical analysis of this stock from using moving averages. If you like technical analysis, please let us know in the comments below. If you hate it, please tell us that too, so we can make adjustments. Let's go down and take a look what RBAM research says today on the stock. These are out for today, the 13th. Apple is right here at the top. We have 1, 5, and 20-day holding periods, and you can see this buy only algorithms for stocks, and as you can see, it's saying 0, which means it doesn't think it's a good idea to buy it. And of course, Apple is down $4 today, so it's the algorithms on track for today. But keep in mind, it's all for entertainment purposes only. These come out every morning, Monday through Friday, before 7 a.m. and it's a good idea to check in and take a look and see what our algorithms think. But again, they're for entertainment purposes only. Let's slide down here real quick and see if we can find trading system. It's down here somewhere. That tells us what, right here. So this system is a beta system. It's not the other stuff I just showed you is all available on our website, the algorithmically generated prices for buys only. But this system we're looking at here is a beta system we haven't put out yet. We just show it to YouTubers and as a bonus, but this is out for today. It's a 30-day whole moving average crossover system, but it's a very sophisticated one. And today for the S&P 500, it's indicating flat. And if you follow the S&P 500 this morning, it's crashed. So that was a good call there. It was short yesterday and it's flat today, so that was a good call. You could have gone short as well, but it gave us a flat out of caution. There's nothing the matter with that. It is indicating a short position on Apple today at $164. So let's see if that was tradable today. I don't know that it was. Let's take a look. I don't think I have it in front of me. It looks like this updated, and I don't know if this is accurate, but it says a high of 160. So this chart just updated. So it looks like the market has not traded high enough to get into our entry price here for our short-term 30-day hold system, but it does indicate a short price at 164, so at least it's got the direction correct. All of these stocks pretty much, other than the S&P, it's calling short for Tesla, Ford, and General Electric and so forth. Again, these are not public. We just show them to you because you're watching on viewing on YouTube. But that's what we show here today. A flat up top, zeros would mean don't enter the market, and down here we show a short. So the algorithms seem to be on track with what's going on today. If you like these prices, you like to get them, you can get them for absolutely free every morning before 7 a.m. at rbamresearch.com. You just follow the link in the description below, go to rbamresearch.com. Absolutely free, no credit card required. And in addition to the 190 stocks that I just showed you, we cover the major forex pairs, we cover BTC for crypto, and we cover the most liquid futures contracts. Everything but the stocks are longs or shorts every day, and the stocks for the main algorithms I showed you are longs only. If you take a look down here, we would love to do several things with you. First of all, if you do not like technical analysis, let us know in the comments below. We'd love to hear from you. If you think technical analysis is the only way to go, let us know that too. We'd love to hear your opinion. If you have ways we can make these videos better, please give us a comment in the comment section below, because we want to do that for you. If you like the video, please click the like button. If you want to subscribe, please do that. Keep in mind, everything you've seen or heard on here, including our opinions and our algorithmically generated entry prices, are for entertainment purposes only. You have to use your own analysis. Can't use our information, including entry prices, for anything but entertainment, and you definitely trade at your own risk.